Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who should be on this afternoon. Good morning, everyone. Still under the weather, so I'll get through the live stream and we'll get prepped for the market. Good morning, Davey. VIX almost unchanged at 2005 pre-market. Thanks for that info. Good morning, Patrick. Good morning, Lauren. So, it might be a little quiet to choppier. I'm only going to be the lookout for momentum bars, but I'll probably be taking it pretty easy today. Continuing jobless claims already out, coming in a little better than forecast by what, a slight beat, but that's still edging up. That number keeps edging up. That's more what I'm paying attention to, and we're not at that 1456K yet. Initial jobless claims coming in better than expected. The Philadelphia Fed Manufacturing Index coming in, jumping back to positive. Business conditions still better than last time, but still stink. uh, Employment coming a little stronger. New orders still down and still negative, and prices paid coming back in from previous, but still highly elevated. I'm still watching, although it won't be a major market mover. I'm keeping an eye on the Consumer Board leading index to see if that's still negative, because again, that's a leading index for tipping into the recession that is coming sooner rather than later. Existing home sales is going to be minor. Then pretty much after that, the only stuff we have is George and Kashikari speaking around lunchtime. So pay attention to that. That's the only thing that I could really see market moving. Good morning, Andrea. Good morning. It's a great day to sit back and dressing up my trade notes. We got OPEX tomorrow. And sort of a quiet day. I agree with that. Unless there's a great setup, it's more so taking it easy, in my perspective. Hey, good morning. Options 22, hot and humid Dallas. I used to live in Dallas a few years ago. So yeah, I'm very familiar. I actually used to live in Prosper, Texas, just north of Dallas. So pretty mixed this morning. Nothing substantial jumping out at me. Cisco's still strong after their earnings yesterday, hitting that first target in the double as I reviewed yesterday. Oil still up a bit. Oil trying to put in that short-term bottom. Other than that, just very, very quiet. Verizon still, ugh. So not much to look at there. FOMC still 65 to 35. Going to see. I mean, we're still a long way off. It's just interesting to see how this fluctuates on a daily basis between the 50 and the 75 basis points. But one of them is going to go in. Remember, zero gamma back at 42.17, and we're way above that now. So that's dampening the rallies, also dampening the pullbacks. And remember, the big numbers are right around this. You see 4,300 with the call gamma, and you actually have a fair amount of put gamma too there. But you can get this gamma kicking in. So if we edge up towards there, especially just slowly grind, it's going to get interesting for a potential pin, some pinning price action tomorrow. Coles is the only thing I was looking at this morning, and that was a miss and a gap down. Again, Coles more of a budget retailer and a miss there. So with a gap down. So far, we've got that one-day pullback overnight, pretty neutral. After that first reaction to the...
Sorry, could you say that again?
Oh, shush. The first reaction to the 200. So what are we looking for today? I'm still keying off these levels. About 42.58 is minor breakdown zone, because then we have 42.49. Then we've had about 42.41. So we got a lot of stopping points to the downside. There's a minor clear path right here, but the breakout zone's right about this 42.43, 42.42 area. And then it would just be a quick trip to 42.12. I'm just not seeing that overall yet with the amount of stuff coming out today. And we're still in spitting distance of 4,300. So I'm more expecting a balanced day with possibly slight upward pressure, but unless I see some major momentum bars, not looking for a substantial breakdown. And anything down in here to test down in here could just be a move to try to sucker some stuff into the market and then a bounce back. So I'm going to be cautious on any sells down here. I mean, yeah, we do have weekly cycles at the top, but they're not going to cut. That's not going to be driving force today, and daily cycles are still down. So you might see some bottom fishing. Remember, the top of the daily rotation zone is 42.49. We might see some fishing come down here, but then I'm watching for some snapback moves. Morning, Rams of Fall. So I that's why yes, we get some major selling with some. I'll be keeping an eye on the tick and the trend, and unless we start getting some sell programs hit and everything else, I'm not focusing on the short side. Minor level is this 13,496, 13,500 for the NASDAQ. You see we're trading against it right now. And the breakout level is 13,557, taking both of those with a grain of salt. If we break down below this, then my major support is 13,400. And I'd be watching again for fishing moves down there. Yeah, we are into a minor clear path move, but this is pretty substantial. 13,400 is pretty substantial support, and then down from there is 13,327, but not expecting that. That's just in case something happens. Breakout move 13,550 area, 13,555. Then 13,583, we can see some chop into, and you have multiple stops still to the upside. Not stops, multiple stopping points. So that's why I'm gearing more for a balanced day, some trading back and forth, some fishing high, some fishing low, and going into OPEX tomorrow. Dow, about 34. You can go up to about 34.50 for a minor breakout, but then you have the breakdown zone. See, all these things were in some chop and slop without a lot of stuff. And you got the Fed speak still, remember, at noon, but I'm not thinking the market's going to key off of that unless they say something shocking. So that's really where we sit. And this is what I'm explaining with all these markets. So we're caught between this little band right here from the overnight price action. We had that little spike down yesterday, the spike up with the Fed minutes, sort of setting a wider boundary, but then we're still within this, look at this little narrow boundary. That's what I'm saying. Break to the upside, you're running in the stopping breakdown area. You trade down even on the open, you have this support. You trade down through there, you have the major support from yesterday. So, it's just I would not be chasing them, would not be putting markets in risk unless you're trying to do really short-term things. And if anything pops up in the short term, it would be based off of key support or resistance and fading those moves for me again, unless we start getting major programs hitting, which I'm not expecting with OPEX tomorrow. Russell breakouts 2000. Breakdowns just in front of this harmonic, about 1987 to 1984 is a support zone. And then right below there is 1976. So same story here. You break above here, you got a little more room to run. You got a minor stopping point at about 2003, but above there it could make a run to 2013 if it can get any juice on. Just check something. It's technically a double. Interesting there. And that does work out, but I'd need at least a close on a 1 hour basis to trigger that 2018, 2024, and return to high 2029 area. DAX, after its pullback, still in the rotation zone. Now, this is where I'm starting to keep an eye on the secondary reaction with the DAX, and this is what I'll be watching going into next week with our financial markets to gauge the secondary reaction to see whether it can return to these highs or not. That's going to be very telling. So far, not even up to the 50% level. The key level I'm watching is about 13,382. And if we break down, major support coming in at 13,557. Other than that, not much trading with this inside day so far to yesterday's big range day. Notes. You have this little confirmed on the 4 hour, but not triggered. I'm waiting for at least a trigger on the 1 to 4 hour for a little bounce play. Other than that, not touching it. It is confirmed, but not triggered, and it is against the 4 hour rotation zone. And technically, you have the first separation of the daily rotation zone, although we're in consolidation right now. That's the only thing I'm watching. If we do break down below these lows from yesterday, 118.17, the major support is still 118.05, which is the 50% retracement level. Crude getting that rotation up, still against the daily rotation zone. Daily cycles finally to the bottom. Weekly cycles still stuck at the bottom. Still, we have the potential double up here, but it's got a lot of work to do. What would be interesting with that is it would be back above the 200, back above the daily rotation zone, and would not invalidate the long-term sell. But before that, my key resistance still is this 90.50 area. Interesting, you would still have an aggressive buy if you did get a daily close above the high from the 16th, which would be 90.65. And that's a very aggressive entry. Only other thing I'm keeping an eye on is we do have a slight divergence with waning momentum and the cycles at the bottom. So keeping an eye on that slightly bigger corrective pop before the next rollover play. But other than that, no great patterns on there. You have this little double that was earlier that triggered, confirmed, and then triggered right here, and it's already pretty much done. And that was a little whipsaw right in there. But if you are still using those targets, it's essentially hit right now. It's just a return to these highs. So there's nothing else there. Now, a move above here gets interesting if you're trying to get above 89, about 75. You are into a minor clear path, and you could make a pretty much a quick run to about 90.50 if we get some momentum coming in there. But that's just a short-term scalpy play. Let's see what else we have longer term. Let's peek in at the dollar index. Dollar index still caught. By the way, this potential double on the 4 hours now no longer a potential double. I'd play this as a horizontal breakdown play now. And that has tighter targets. So, and I'd need a close below 106.30 area. Then that'd be 106.10. You got an advanced clear path here, 106 and then 105.88. This is trying to build up, holding this 4 hour rotation. Excuse me. Holding this 4 hour rotation zone. So I'm still watching for this break above 106.83. Little poke above there. When I say break, I need to break and retest that level if it's on the shorter time frame. And then, then I'll be watching for that break play. You got some key resistance coming in about 107.21, but I'm going to be really focused on this 107.40. You have this little hitch pattern there, and that's the 62.5. And we know how statistically and probability-wise relevant that has for a potential return to the high. Hello, Eric. Good morning, Josh and Andrea. I love when my notes match what you are saying. Well, then you are super smart, Andrea. You're no, when you get good at technical analysis, sometimes things don't line up, but a lot of things, whether you're using the same techniques or other techniques, a lot of technical analysis can line up, and it's always nice to hear that kind of stuff. So this is really what I'm watching on. Also with the dollar index, that would also be back below the 4 hour rotation zone, but really focusing on that potential higher break. VIX, now this double is turned into a triple. No double on there. Little bounce back here, but this is definitely a multi-bottom coming in here. Still, we got this key resistance about 2025, the support area 1950. So unless this really breaks down below that or up above there, I'm still watching for the on balance day. Let's see what else we have. Peaking with the euro. Euro, remember we talked about that shake and bake. And we got that pause. And now if we really take out this other side, this 101, then we could see a pretty rapid decline. Why do I call it a shake and bake? Because you have this consolidation breaking out to the upside, and then the quick reversal, taking out the midpoint. The key thing is when you get this consolidation to take out the midpoint, and that starts trapping people, and then you take out the other side, you get the acceleration to the downside. So that's what I'm watching. The only hitch in that plan is you got the daily cycles at the bottom, but weekly cycles are at the top. That's why I need the confirmation to really break down. And interesting enough, you have the 62.5 below there, so we get the close below there. That then favors, not only do you have the shake and bake pattern, you have the 87.5 statistical probabilities, which is a return to the parity level. So that could get interesting, but I needed to trigger below that 62.5. Bitcoin, dead for right now. Nothing going on there. Not even a great short-term play just yet. So sitting on the hands there. Tesla, yeah, the potential double is still in play, but nowhere near triggering yet, holding the daily rotation zone. So the key breakdown area will be about 899, but then that's would only be back to 861. The breakout area, you got to, there's been some substantial selling above this 932, 935 area. So if we, that's key resistance on the short term. If we do break above there, it's 941 to 953. That's where we sit. But daily cycles at the top and starting to roll over. So it's more that watching for. I would not get trapped in a long play up here from a personal standpoint. What else do we have? I think that is it. Let me just check in. I just wanted to peek again at Kohl's. Yeah, it's still down with the miss. Again, another sort of more discounty retailer on a miss to the downside. So we shall see. And you had those numbers from Target. Walmart only beat because of their big reduction from the other day. I'm going to be focused more so coming up just with Walmart. You see we got these two bottoms here. We start breaking below that. I am focused on a Walmart gap play. So keep an eye on the gap low from Tuesday with the earnings. If you're playing stocks, that's 138.31. The statistical levels for the gap fill, this is where I like to use these levels for especially stop reduction. So if it's you're going in short, first level stop reduction 137.59, 137.31, then you get the close below there, then it's targeting the gap fill. So that's just even if you don't play stocks, it's handy because you can play these things in other markets. So it's, oops, that's slightly off. That was the correct number. So 137.65. And look at that. The 37.5 from that's right by this breakdown zone. So keep an eye on that. And then this disc level is 136.39. Why do I put this out there? Because even if you don't trade the stock, it's still handy to learn some of these techniques to put in your repertoire and start researching them. All right, going into the open, I think that's about it. We'll just peek back at the S&P again. I mean, if you're really see, even on this short-term basis, I mean, I'd keep in more of an area on this 42.78 going into the open. You go below that, you might get that little pullback move to watch to get suck some people in, and then your minor level below that would be 42.75. Rally above 42.84. I'll be watching to suck people into 42.87. Is there a double top that triggered on the Qs? Sorry, a double top that was triggered on the Qs? No. This? Oh, this one? This little one? Yeah, this little one did trigger. This did trigger with the conservative targets, and it's hit the stop reduction target already. Sorry, I forgot to list that. And you see here coming back, your stop level is 331.40. It's already hit the first target 326.97, 325, 87, 324.77. And your stop, you've reduced the stop already. So that's the key level to the upside 331.40. So there you go. Yep. But I'd be watching more so. If that doesn't stop out, I'd be watching more so for it to do tomorrow. Also, this final target's just in front of this lower gap. I forgot to look at the spiders and the Qs. Sorry about that. The spiders did not have anything, and pretty much the gap down, virtually filling the gap, filling it to this little bar. Not technically to the close, but that's virtually done. So there's nothing going on there. Any thoughts on Home Depot? Home Depot is still, I mean, this triggered this horribly sloppy head and shoulders. This would be a stop raise from this perspective, anyways, on this quick breakout move, because I was really targeting. It's got this huge hitch in there, so this was a stop raise, virtually coming in with the S&P. I would not be surprised to see us retest the level. And then if it can break through there, the major key area I'm focusing on is 343 to 345. Wouldn't be surprised, though, from this overbought condition to see the pullback in the short term. So that's what I'm watching. And your major support is now back to 315. All right. Going to wrap it up with 4 minutes to go. Thank you, everyone, for tuning in. I will be back with Bob this afternoon, and hopefully I'll be feeling better then. So I'll talk to everyone later. Bye for now.